welcome to Ask for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Stocks drop as investors have a tough time digesting a disappointing jobs report at the end of the session. All major indices did end the day in the red. And that lackluster outlook on labor may trickle into bad news into the commercial real estate space. We're speaking with an expert with a lay of the land. And hitting the road in style, we tried the newest hybrid from Lamborghini and tell you all about it if you're considering spending nearly $400,000 for the vehicle. We also have insights from the car maker's C-suite. Well, we're wrapping up a big week of earnings and looking at some of the top themes investors are digesting out of the earnings calls. Here with more is the Transcript author, Eric Mokaya. Eric, a big one, and let's start here, Eric. That would be capex spend, right? Particularly around scaling AI. What did we learn about that?
So in terms of capex, big tech are ramping up pretty much this quarter. What you're seeing is an estimate of around 320 billion to 400 billion capex guide for the next financial year, annualized for most of these companies. The key takeaway is that they do not want to fall behind, and because of that, they're ready to spend whatever it takes to be able to get ahead. So in terms of capex, you have Amazon, you have Meta, you have Microsoft, all of them guiding to way higher capex than before, and all of these are geared towards building up a core AI infrastructure to be able to be able to do well in terms of the AI area. Something else you can also take away from that is that that AI is becoming a major mover in terms of all these companies, and they want to spend as much as possible to be able to acquire not just the infrastructure for it, but also at the same time to be able to acquire people from other companies. Meta has been a lead on this, to be acquiring people from other companies, spending a lot of money to acquire entire companies, to spend almost as much as $1 billion to be able to get researchers. So I think those are some of the key takeaways that you can take from the earnings so far from big tech.
One thing, Eric, too, is, investors have questions about just the ROI on all this spend, which is incredible, Eric. I know folks did look at Meta and they said, okay, well, hey, AI, it's there, it's driving usage, it's driving monetization. But what do you make of that question?
I think when you look at ROI of AI, that's a big question. It was a bigger question, I think, last year in earnings. A lot more analysts were asking about it, but this year not many are asking, and the few are asking more, accepting the fact that all of these companies have to spend to be able to get ahead of the curve. 400 billion is almost the entire market cap, or at least the entire raise that the valuation of OpenAI. So in terms of these big companies that are spending in the next year or so. So the takeaway is that at least for some companies like Microsoft, they're able to show tangible ROI in terms of the spend that they're having. They say they have a lot of backlog, and that backlog supports the capex they're spending in this regard. Some like Meta, they're only showing it in terms of maybe improving their targeting of ads and all, but it's still minor. So I would say there is a spectrum. So there's Microsoft who can show ROI, and then there's Meta who can also tell you, like, okay, we're just trying to build this platform and be able in the future to extract as much as we can from it, and hopefully, given our past in terms of monetizing, we'll be able to leverage that to be able to assure investors that in the future we'll be able to monetize it as well as we have the other platforms. So I think that's the key takeaway from earnings.
Another big tech theme surrounding AI, that battle for leadership, Eric, and we're seeing big growth. You look at Microsoft's Azure propelled by AI, very impressive number there. We're seeing, Meta CEO Mark Zuckerberg kind of laying out his vision for super intelligence, right? Talk to us about what was said on these calls.
So in terms of super intelligence, it's only Meta that is talking about super intelligence. I would say Meta is a bit interesting in the sense of a couple of quarters ago, they were talking about metaverse. And now they switched, they want to be fully on super intelligence. And what they're telling us from the earnings calls is that, hey, super intelligence is near. And that's when, they're able to use AI to make almost human-like decisions at the end of the day. So they're saying it's undeniable. The improvement has been slow in terms of systems being able to improve themselves. But now we are at a level where we are able, the super intelligence itself is in sight. And for Meta, they're not willing to fall behind, and they want to put up as much capex as possible to be able to get there. So I think that's what you're getting from earnings, and it's only Meta that is focused on this super intelligent stuff. The other companies are more focused on just trying to get ahead of the trend. Google is just trying to leverage AI to be able to stay ahead of search. Microsoft is just using AI mostly to be able to provide to provide credits on Azure for a lot of its customers. So I think only Meta is mostly focused on super intelligence, and they're going head to head more with OpenAI in that regard.
Speaking of Zuckerberg, Eric, how impressed are you by how successfully he's poaching top AI talent from rivals? And how impressed are you, Eric, by the pay packages reportedly he's offering, which sound like what you would offer an NFL quarterback?
I mean, the spend is massive, but when he's asked in earnings calls, what he's saying is that the thinking behind it is that, hey, the term that is going to be generated by having these people in our team is so huge that it actually warrants spending whatever it takes to get there. So I think for Mark Zuckerberg and for Meta, generally, it's like, let's do whatever it takes to get there so that you can get there ahead of everyone else, monetize it as quickly as possible, and then be able to take advantage of that. And then that will kind of generate the ROI that is needed to pay currently the people. The amount that is being paid, talked about, is about $1 billion sometimes. That's a lot of money. That's almost as much as, that's a tenth of what the capex from Google in terms of Google was able to raise capex by $10 billion. $1 billion of that, imagine, going to one person to be able to poach them from OpenAI. So that's a big ask at the end of the day.
Eric, great to see you as always. Thank you, sir.
All right, thank you.
It's now the time to get into commercial real estate. We have a guest to break down the market. Stick with us. The July jobs report numbers coming in weaker than expected, with the U.S. adding just 73,000 jobs in prior months, getting revised much lower. The new data potentially reshaping where the commercial real estate market moves next. For more, we're going to bring in here Liz Hart, President of Leasing for North America at Newmark. Liz, it is good to see you. So maybe start right there with that jobs report, Liz. It was weak. You know, you saw these big downward revisions, Liz. It surprised the market, surprised investors. I'm curious, Liz, you know, you see a report like that and a headline like that. How do you think through it, Liz, through the lens of your expertise, commercial real estate?
Absolutely. Thanks for having me, Josh. So it was a surprise to me as well. We track tenant demand in the market very closely, and what we've experienced is an increase in tenants who are touring and looking for more space than what they're occupying right now. In the beginning of 2025, that number was about a third of the market. Now it's 48% of the market. Most of that growth is being driven by the tech industry. So perhaps the difference between the jobs report and what we're seeing in the commercial real estate demand is actually more companies being committed to the office and getting people back into the office.
Let me ask you, Liz, you know, we had smart strategists and economists on the show today and thinking through that jobs report, and they were saying, listen, some of them at least, the odds of a September cut by the Fed just went up. That happens, how does that ripple through the CRE market?
Yeah, I mean, lower interest rates are typically better for the commercial real estate industry, so that would be seen positively. We would look forward to that cut in September if that were to occur.
Taking a step back, Liz, you know, more broadly, if you were looking at the CRE market right now, what does it look like now? How would you characterize it, Liz, versus, let's say, 6 months ago or 12 months ago?
I mean, I think, again, that biggest change has really been the demand that's come back from the technology industry. They were about 12% of the large transactions that we track over 100,000 feet about 12 to 18 months ago. Now they're almost 20% of that, mostly driven by AI, a lot of growth in the San Francisco Bay Area market, also in New York City. But you're still seeing, of course, that really great demand in the trophy office product as well in all urban areas.
I had a question. You mentioned New York there, Liz. You know, here in NYC, Zohran Mamdani wants to be the next mayor. He's really targeting that issue of affordability. And one way he wants to do it is freezing rents. You know, still another way you could attack that would be, increasing supply, of course. And you would think, well, maybe there's a way to restructure, retrofit commercial buildings for residential use. How real is that trend? How real is that theme, Liz? We talked a lot about it. I'm just saying, is it out there?
Yeah, I mean, I think it was definitely a theme that was a little bit more prevalent in the beginning part of this year, but across the entire office product in the US, we're tracking about 2 to 3% of the office market that could convert to resi. And I think that's generally seen as a pretty good thing in the commercial real estate market. I mean, the buildings that are being retrofitted are not the ones that are necessarily leasing off the shelf to office tenants right now, right? They're looking for renovation for a reason. And we see that supply being repurposed as a good thing.
Final question, Liz. What about tariffs? How does that impact the sector? Who's more exposed, relatively less exposed? Walk us through it.
I mean, I think probably the most exposed sector would be new construction, right? Because of the implications of what could happen from a materials perspective. But with the one big beautiful bill, you also have some preferential tax treatments that are going there for bonus depreciation on new products. So that is likely to offset it. So we see it as being pretty neutral.
All right, Liz, thanks so much for your time today. Appreciate it.
Thanks for having me.
Well, U.S. stocks sink after President Trump's tariff hikes and the July jobs report showed signs of a labor market slowdown. Here with the trading day takeaways, we got Yahoo Finance's very own Jared Blikre. Jared.
Thank you, Josh. There's no other way to put it. It is bad news, and bad news means bad news today. And so let's take a look at the Wi-Fi Interactive, and we can just kind of game out what happened in the indices, along with some of the bond market and just about everything else. Here's the Dow. You can see it was already down today. Took another leg down from close yesterday to open today. Here's the Nasdaq down about 2.24%. But I think some of the really interesting moves here are not only in the US dollar, and we'll take a look at that real quickly. Again, a 2-day view, you can see a big drop here that ended that 6-day streak that I've been talking about. But the bond market, and let's do gold first, we can see a nice little pop there. So what does this all mean? Because we're seeing the 10-year T-note drop 14 basis points. We haven't had a move since right around Liberation Day. So we've got investors piling into bonds, especially the long end, but also in the 2-year, we're having some record-setting days. And we saw gold pop up. This is all about the Fed, or markets pricing in more Fed rate cuts, and not in a good way, because a lot of people think, oh, Fed rate cuts, that must be something good for the market. But Joe Bruce Wallace was here earlier, and he put it very succinctly. If the economy needs those job cuts and they need them badly, well, that's going to be a problem. And I think we're seeing that here in the 13-week T-bill rate. Let me just show you from one day to the next, it usually doesn't move this much. 5 basis points is a lot for this instrument to move. It tracks a very short end of the curve. That is where the Fed operates on.
Any evidence of hot money flows this week?
Yeah, guess what? IPO is back on the stove. We'll see what happens if stocks continue to roll over here, but for the time being, I mean, Figma was just a huge event yesterday. It took until 2 p.m. for this stock to finally open, and when it did, it was a multiple of the $33 IPO price. You can see over the last 2 days, well, that doesn't look great. Let's try this calculation. There we go, 269.7%. Hit a high today of something in the 130s, so that was just an incredible move off of that. And I actually had the chance to speak with a VC, that's venture capital investor, Brianna Samuels, had her back on Stocks in Translation, and she had this to say about the venture capital market and IPOs.
So everything, when you think of valuation, is connected. And this is like one of the things that is giving us some hope and optimism overall in the private capital markets. When you look at the first half of this year so far, we are seeing an increase in the US in pre-money valuations, especially on the earlier stage side of venture capital, with the only exception of the category of Series D startups, maybe not seeing that big of an increase so far.
So I found that really interesting. So we are seeing some more activity on the very early stage investors. She said in Series D, which is later stage companies before they go public, and maybe a lot of them right before they go public, investors just not as interested in those. But the pipeline has got a little bit more money. Looks like it's in better shape than it was last year. There was a huge fallout after that 22 bear market. So where do we go from here?
Where do we? How about other speculative areas of the market?
Crypto, it's right there on the screen. It was there the whole time. All right, crypto also took a risk market dive today. And let's check out what's happening in Bitcoin. This is 2.54%. This is over the last 24 hours. Let me just show you the 5 days, basically since Sunday. So we were in a trading range, and let me do this. I'm going to show you a 1-month chart, and this will show this. We'll do a 3-month chart. What I want to show here is that we are in this tight consolidation range. From that range, we have broken down. Is it catastrophic? No. I was very encouraged by the Project Crypto comments from SEC Chair Atkins today, and we just had Jennifer Schonberger interviewing him. I thought it was very telling that the SEC is getting so ramped up in this, and it's going to take years for them to hash out a lot of the regulations that will come into effect because of the Genius Act. But nevertheless, crypto is going to get a huge bid long-term. Short-term, we have broken down there. That was Bitcoin. Let's take a look at Ether. Ether has also broken down, and I was also looking at competitor Solana. Solana is a little bit of a different formation, but it has now fallen back into a prior trading range. So for everybody who is excited about Bitcoin rocketing to 150, 100, or 200,000 or even higher, looks like that's going to have to wait a little bit.
What's on your radar this weekend?
You know, I will be watching crypto a little bit, but I'm not going to be worried as much. You know, I think that the stocks are in a really interesting position right here. I'm not going to call it top, but I am a little bit concerned that the market is pricing in additional Fed rate cuts that might actually be very necessary.
All right, thank you, my friend.
You bet.
Appreciate it. Well, Lamborghini looks to enter the electric vehicle space, that and a whole lot more, asking for a trend. That's right after the break. Ultra luxury car maker Lamborghini is out with its new hybrid vehicle with a price tag of $380,000. And our senior autos reporter, Praz Marine, spoke with the company's president and got to drive the car. Praz, welcome.
Yes, the new Lamborghini Temerario is out, the hybrid supercar now, so that now they fully electrified their line with hybrids. You know, Lamborghini was supposed to actually put out an EV pretty soon, but they've sort of had to dial that back a little bit. And, you know, before we got a chance to drive the car, I spoke to CEO Stefan Winkelmann about their EV plans. We've seen a number of companies, including yours, kind of push back the full EV timeline. What's the latest on that?
Well, we decided two things after looking into the acceptance curve of battery electric vehicles, which is flattening in comparison to the previous thoughts of the global automotive industry, and therefore also for us it's lowering the expectation in terms of growth rate. So we decided that the follow of the Urus PHEV will be again a plug-in hybrid car, and that we postponed our first model a bit to understand when is the right time to come with it.
So it still makes some sense for BEV in the luxury world, potentially.
Potentially, but we have to see, as we said here, we have to come not when the technology is ready, but when the time is ready, and when it's going to be successful, and when the customers are accepting it. And this is paramount for a company like ours, because we are delivering dreams and not mobility.
Yeah, it's talking about delivering dreams versus mobility. They're not a mobility company. They're an emotional performance company. So actually, that combined with, you have the EV situation combined with tariffs, that's been a thing that's been coming up for really expensive cars. How do you handle that? What they've been doing is they've been absorbing a lot of that cost and passing on some of that to their customers. They think it's unfair to pass the whole cost down. So that's part of the sort of business decision there with the company. And then we have the new trade deal, so that's going to help them out. Secondly, I kind of asked about sort of the future of the company and where they kind of see this luxury luxury automaker, where they see themselves. And here's what they have to say. What do you see the next 20 years bring to Lamborghini?
But for Lamborghini, it's not about volumes. No, it's about how much you earn that you can reinvest in the newest technology for the future, because the world is more complex. Life cycles are shortening. Investments are getting higher. Technology is evolving faster, so you have to keep up with it. And so we have to grow in terms of awareness, image, and to have a solid customer base which is appreciating our cars also in 20 years from now, and this depends a lot on us. If we keep up with the newest technology, but if we continue also to be trendsetters.
Despite some of these issues with electrification, tariffs, some sort of global uncertainty here with high rates, things like that, Lamborghini still had first half sales a little bit higher compared to last year, which is more than you can say about a lot of luxury automakers who have been suffering recently.
What about the new car? You test drove it, how did it feel?
The new car is simply, I guess, pretty astounding. The predecessor was called the Huracan. This new Temerario is 900 horsepower, almost 1,000 horsepower, right? A V8 that goes to 10,000 RPM, right? But what's really interesting about this car is that it's electrified. So it has two motors in the front, right, that drive each front wheel. So basically when you kind of go around turns, it'll spin the outside wheel faster, kind of move the car around. So you almost feel like you can do anything in this car, right? Like you can go 200 miles an hour, hit the brakes, turn right really hard, and the car will do it. It's kind of almost like magic, trickery, alien technology, whatever you want to call it. This car sort of has it all, and it's super fast. I will say that because of the turbo technology and the electric motors, it's not as loud as the predecessor was, the V10, howling V10. This engine can get pretty loud, but if you're driving 10,000 RPM at that speed, you shouldn't be on any local roads.
Who are they taking on? Who's the rival for this new car?
So Lamborghini and Ferrari have been locked in battle for a while now. Ferrari would say, we're one of one. Lamborghini, they're not our competition, but in reality, they really are. You have Aston Martin, right? You have McLaren. They have cars that up this level, of this price, performance-wise. I've not driven the Ferrari 296, but I've heard that car is sort of the pinnacle, and the Temerario is probably there, if not, maybe it surpasses it. I'm not sure. I'll have to drive it.
Yeah, next assignment. That's what it is. Thank you, Press.
Thank you.
So it's time now for what to watch in earnings. Coming up, Palantir, AMD, and Disney. So with Palantir, which is reporting second quarter earnings after the bell on Monday. Company stock has shot up over 100% year to date, marking the company as one of the best performing stocks in the S&P 500. Investors expecting good results for Palantir's commercial segment, though aware of pressures like potential competition and defense contracts from other AI giants. And next up, we've got AMD. It's set to release its second quarter results after the bell Tuesday. The semiconductor manufacturer stock has rallied massively throughout the quarter, spurred on by the booming AI trade as well as momentum in the company's PC business. As a result, investors expecting solid future results with more emphasis in GPU sales, AI revenue, and preparations to grow the company in the second half of 2025. And finally, let's talk about Disney, which reports earnings before the bell on Wednesday. Analysts saying that the media giant will have a solid third quarter, likely unaffected by competitors attempting to break into the theme park space like Comcast Epic Universe. Investors watching for updates on the media giant's growth in the streaming arena. That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.